TNT Unfiltered 1. Now your hosts, Tyler Freed and Tim Lombardo.
All right, welcome back to TNT Unfiltered. I'm Tyler.
Tim Lombardo here.
We've got some paperwork in front of us, and we're gonna ad-lib here.
We've got some
audible.
We've got some paperwork, a little bit of an audible, because this one, my opinion, really matters, because I believe it's going to be a market driver later. So you and I had the conversation a while back, rental houses. What's it cost me to rent a house in Maple Valley, Black Diamond, general Kent area?
Yeah, you're talking 3,000 to 3,200 based on how many bedrooms you have, and what's the break-even point, right? The last couple of years we've been pushing for financial freedom and long-term wealth to get your primary and then get some investment properties and use those to help pay for kids for college. We're not really breaking even or cash flowing now, though. So
that's a struggle.
Yeah.
So 3-bed, 2-bath.
Yep.
Approximately 2,000 feet.
2,000 feet. You're looking at right about $3,000 in the area, 330 Kent, Valley area.
So that's first-time home buyer. I'm going to go buy it, whatever, and then we've got, say, hey, I want as an investor, I want to buy one of these houses and put it in the market. What's that look like?
So that's going to be the actual rent that they're going to be collecting.
Yeah, $3,000 a month.
Right? $3,000 a month. Yeah, and then so you're talking about in turn the investors.
Yeah. So you're going to go buy a house and put it in the market. What do you think you have to spend to replace that house? Like, what's the value of that house?
Well, big down payment, right? Like we were talking about.
Yeah.
In the past, we've been doing 25% down, and everything's cash flowing and looking good. You just ran the numbers, and what did we need to beat it? That's
the part that got me, is when we looked at this thing and we looked at all that, we were 675. Okay, so the house value is about 675, and I think that we were at 45% down. So 45% down on a 675 house is about $310,000.
Yeah.
Plus closing costs, which are going to be under 10. So you're $320,000 to buy an asset and then put a renter in there, and all you're doing is break it even.
Yeah.
Like, there's no money to be made except appreciation and principal paydown.
Yeah, you're just playing the appreciation game.
That's exactly. And the question is, okay, so we isolate and say, okay, investors got to put down 45%, park a lot of cash, may or may not make sense.
Right.
And if investors aren't doing this, and I've done a lot of these kind of refinances, so I'm familiar with them, but if investors aren't buying these, what's the future for renting?
Less, right? I mean, there's going to be less opportunities.
Smaller pool
of inventory, just like we're seeing in real estate right
now.
now. It's going to be the same thing, and it's just going to drive demand up and costs up for these $3,000 a month places that are 2,000 square feet.
Yeah,
they could be 4,500 in the next 3 years at this rate.
That's the part I think that concerns me the most, is renters say, oh, I got a great rent and I only pay $3,000 a month or whatever the number is, and the payment jump is big. Right. And then and they feel comfortable because right now it's $3,500. But what happens in 4 years when it's $4,500?
Yeah,
they're gonna go, oh, I should have just bought the house at $4,500 and owned it 3 years ago. So that's a struggle. What else do you see on that front that matters?
Well, I just think it's important to keep track of these. I mean, we pulled up just the Maple Valley and Covington stats in Black Diamond, and $1.70 a square foot for some of these properties was the average. So I think last year 42 homes got rented out in our area, with the average size being just under 2,200 square feet, with the median rent of $3,400.
And that's 170 is kind of like, that's kind of the median. Obviously, as footage gets smaller, price per square foot probably goes up.
Yeah, exactly.
As footage goes bigger, the price comes down typically.
Yeah, so these monster 4,000 and 5,000 square foot homes aren't getting that $1.70, but it's pretty interesting to track. And we got to get this information out to our investors. These are good markets, and like we keep talking about, there's always going to be a need for rentals.
There's always a need for housing. So what would you say? Like, is there a fix for this, or what would you recommend someone to do to apply this?
I think, we always talk about economists and real estate agents are always saying, you got to buy now, you got to buy now. If I'm an investor right now, we both are, we're waiting a little bit. I think there's other avenues we can put our money in. We could just put it in a high yields
savings account at 5%. On $300,000, you're making $15,000 a year, and the money's just sitting there. Don't got to worry about a renter or a house or a roof or any of that kind of stuff.
Missing payments, or going over there and changing light bulbs.
Sure.
I think the play is just keep an eye on it, but there's going to be opportunity. So I think the rates need to go down a little bit more. Right now, I'm saying move your money somewhere else or park it. And kind of go from there.
Yeah. Awesome. Anything else you want to add to that?
No, that's perfect.
Yeah. Thanks so much for tuning in.
We'll catch you on the next one.
You've You've been listening to TNT Unfiltered. We hope you've enjoyed the show, and we hope you've gotten something from it. Make sure to like, rate, review, and subscribe. Find Tyler on social media at Tyler Freed RE.